Hello and welcome back. If this is your first time here, I am Dr. Stock, Doctor of Education, fresh off a live stream with Stock Moe. I will put that link down in the description if you want to check it out. We talked about a lot of really cool things, a lot of informative things, so step on over there, check it out. Also, if you haven't checked out Stock Moe, please visit his channel, check it out. And let me move on from there. In this video, I do want to talk about what I see going on with the markets, give some commentary going forward with the markets, also those GDP numbers that we got, initial jobless claims, and also what in the world is going on with the federal funds rate as a result of yesterday's meeting and in light of today's reports that we got. That's exactly what I want to talk about in this video. Before we get to that, I just want to let you know that I saw a nun walking down the street the other day, and I said, why do you wear that funny hat? And she said, it's a habit. All right, so I do want to get right into it. I know that your time is precious and I value your time and I also value mine. So let's get right into it. In this video, I will show you how to get up to 16 free stocks using my link that's down in the description. And over here, we have the economic calendar on trading economics. I have no endorsements here other than the fact that I really like how they have it laid out and that it's really consolidated and condensed and it works well for the videos. So durable goods orders, actual 4.7, that's good for the economy. We have a GDP growth rate. Expect 1.8. We got 2.4% annualized. So that's over 0.5% that we saw of increase from the previous quarter. So annualized, of course, just take the 2.4, divide by 6, divide by 4. And that's about where you get that 0.6-ish that we come out for that GDP growth rate. So that's much hotter than expected, which typically is a good thing for the markets, and yet they sold off anyway. And then also, what do we have here? Initial jobless claims. We have an even tighter jobs market than what we had previously reported. So still well down in the low 200,000s for initial jobless claims. Also great. It sounds like the economy is doing really well. Well, in the Fed meeting, we heard a lot about loosening of the job market is expected. And it also sounded sort of like Jerome Powell wanted that to happen. So beyond expectation, wanting that to happen. And I still am of the mind that we get no further rate hike. And I will pull up the CME FedWatch tool. I do want to point out that PCE prices, quarter over quarter, 2.6% that we have, down from the 4.1 previous. So also good news when we look at that. So we have lots of good economic news coming out, not only for the strength of the economy, but also reason to believe that inflation also continues to come down. We do want to keep watching that consumer spend. Tomorrow we get personal income and outlays coming out at 8:30 in the morning. So when we get that, that also includes the PCE, also mentioned by Jerome Powell. The Fed does use the PCE, CPI, PPI, ECI. I mean, there's so many darn acronyms. It takes a while to wrap your head around all of them, but I do discuss them throughout this channel and what they mean for the markets. I do expect the PCE to come in relatively cool from where we're at right now. As a matter of fact, if I pop trading economics back up there, we can look and see what they have for core PCE. Their consensus right now is 0.2. Forecast is also 0.2. That's the trading economics forecast that we have. So beyond Wall Street's consensus, the previous was 0.3. So coming in at 0.2 annualizes to about 2.4%, which is right in that wheelhouse of 2% annualized inflation. And the Fed said, or Jerome Powell said in a speech yesterday, that on the way down to 2%, that is where we start cutting rates. And I don't think that happens in September or November. I think that we see that in their December meeting. And I know that that's earlier than anticipated, than expected. As a matter of fact, we'll pull up the CME FedWatch tool and see exactly what's currently expected as per the bond market. So this isn't just Dr. Stock talking. This is what is actually expected by the bond market. So you can see right now the current rate target is 525 to 550. That's the raise as of yesterday. And 80% chance that that's what we still have. So a pause still continued in September, 20% chance of a rate hike. Now, the significant thing there, and I don't know if you can see it or not on your screens, but that was 1 day ago, almost 80% chance of another rate hike. So the bond market also has changed its mind based on what it heard from Jerome Powell and what they see for the economic outlook moving forward, not only for the economy itself, but also inflation as it relates to it. And so it was, 1 month ago, 66% chance of a rate hike in September, 80%, then almost 80%, now down to just 20% chance of that raise. A little bit faster now. So for November, still the most likely case, and not that there's no small chance of a rate hike happening, but the most likely case as per the bond market, still pausing into November. And then look at December. Look where that peak is. That peak is still for where we're at right now. Let's go into January, and the highest peak that we have for January is still right 525 to 550. So still pausing. Let's go to March and see if March is where we finally get that dip. So March, there we go. I'll get better at scrolling here sometime. Now is where it starts being even. So it starts becoming more questionable, more of a coin toss as to where we're still at that same rate, or if we start to pull back from that going into March of next year. So we're going to have to watch and see as that happens. As a matter of fact, we actually had a shift downward in the rate hikes when you look at the history here. So if you search up CME FedWatch tool in Google, and you can look at this, just scroll right on down. It'll be right there. And right now I'm looking at March of 24, and you can see, as a matter of fact, you can see it in other months as well. You can see that shift downward by one of the rate hikes. So they do expect one fewer rate hikes than they did, well, yesterday. So that's good news. And the economic reports that we got today with GDP, with inflation, with durable goods, all that kind of stuff factored in, they actually see it to be less of a chance that we get a further rate hike. And yet now to the markets, they see the markets selling off anyway. So I'm going to move over to Moomoo. Remember, you can get your 16 free stocks by using the link down in the description. Let me pop that down and pop this up. And what we're looking at here, this is QQQ, which tracks the NASDAQ 100, and all that excellent news. And what happened, we started off high, and around 1 o'clock today, all three of the major indices, Dow Jones, S&P, NASDAQ, they all sold off right around 1 o'clock, and they currently sit right now. This is the Qs, which tracks the NASDAQ 100, which is currently sitting at support. So all that good news, and we sell off anyway, it is possible that we start seeing a little bit of a pullback in the markets. And let me just talk about that, give some commentary on that for just a moment. The last time that we pulled back was back in March 13th, which was a Monday, which followed the whole banking crisis with Silvergate Capital, so SVB. And then we had a 36-ish% rally from that Monday moving forward that the NASDAQ just took off and ran with it. And this again is the Qs tracking the NASDAQ 100. 36% is the rise that we took on without any real pullback taking place whatsoever. That is incredible to watch that sort of run happen. Now, corrections, pullbacks, they are healthy. So after going up 36%, and I'm not saying that we get that pullback, I'm just saying that it's possible that we don't hold at this current support, which, by the way, if we look back, it refers back to this peak that we had back here in September. So it does really help to look left. I do think it's possible we come back and at least retest this peak that we had back here. And what is that? Out of the 36% run that we had up, we'll go from the most recent peak that we had. Sorry for the noise. We'll go from the most recent peak that we had and see where we sold off to so far. We've given up about 3%, not horrible. From that peak down to about where we could go with this, that's a total of about 6% when we look at that. And so if I redraw that one more time, from where we currently sit down to about where that support level is, about how much more could we expect to give up during that, it ends up being somewhere 2, 3, 4% that we could give up, maybe coming down to about this 50-day before riding out a little bit and recovering. So if we get that pullback, I would like to say that it doesn't necessarily mean that the market's going to come ripping back down. It would be something that's natural to happen. I mean, just go ahead and look back through history at all the different rises that we've had, that there's been some time in between where we've given back a little and then we started riding back up again. So that natural fall off allows for more opportunities to come in, and like we just want that to happen, because the more you ride up without corrections, the bigger you can fall. And do we fall through the 50-day? It could possibly happen. So that's the commentary that I wanted to give on that. And with Moomoo, there you go. For those of you who are interested, you want to check this out, 16 free stocks by using my link that's down in the description. And all you got to do is sign up using the link and then deposit $100 up to $5,000. Well, you can deposit as much as you want to, but for deposit of $100 more, you get 5 free stocks and a $50 cash reward. That $50 cash reward stays for the next 2 deposit levels. However, you get 15 free stocks for $1,000 or $5,000 deposit, each one valued up to $2,000. And then also for that $5,000 level, one thing is included, guaranteed, either Tesla or EXPE, and that's significant when you look at that, especially if you are fortunate enough to get Tesla EXPE, great company. Don't follow them. Tesla have a lot of fundamental analysis into it, and I have them 5xing over time. So that could be a very significant return to you over time in your portfolio just for doing the sign up bonus that I have here. So I come here to YouTube to provide value and service, and Moomoo I think offers one of those things that you can do that also helps to support this channel as well. And if you haven't already signed up, you're getting access to a wonderful trading app, wonderful earnings calendar, and they have just a lot to offer. They also have learning programs in there as well. And I'm an educator by profession, and honestly, education is my life. Highly believe in it, and they have just wonderful resources and materials. If you like my commentary, like to hear more of it, you can check out my link down in the description for the Patreon. You get access to my exclusive content and early access content, also access to my watch list of stocks that I have over there, both long and short stocks, and my YouTube mentions. And then I also have a private Discord over there. You can be part of the community members. You can talk with me throughout the trading days. I'd absolutely love to have you guys over there. If you did find that I added value to your day through this video, please hit the like button, subscribe button, and ring that notification bell. I am Dr. Stock, Doctor of Education. Remember, my friends, learning is earning, and we'll see you in the next video.